Cryptocurrency tax and GST ATO guidelines. Cryptocurrency, tax and GST guide are my SMSF video. At my SMSF, we are delving into the exciting world of cryptocurrencies. In today's video, we're going to explore the guidelines set by the Australian Taxation Office, ATO, regarding the taxation of digital currencies and GST. So, if you're curious about how crypto assets are treated for goods and services tax, GST, purposes and tax, you're in the right place. Understanding ATO guidelines for taxation of digital currencies. Cryptocurrencies have taken the world by storm, but with their increasing usage as a medium of exchange, governments are stepping in to establish taxation guidelines. In Australia, the ATO has provided clear instructions on what qualifies as digital currency for GST purposes. Let's dive in and uncover the details. To understand digital currency, we need to grasp the concepts of cryptography and distributed ledger technology, or blockchains. Digital currencies utilize these technologies to secure and record transactions, ensuring the integrity and the transparency of the entire ecosystem. For GST purposes, digital currency must be fully interchangeable with the same currency. It should function as a form of payment, easily accessible to the public without significant restrictions. Plus, it should not be tied to any specific country or government-issued currency. It's essential to note that loyalty points exclusively redeemable within loyalty programs and in-game tokens lacking usability outside the game environment do not meet the criteria for digital currency. Now, let's explore some examples of digital currencies that do qualify. Bitcoin, the pioneering cryptocurrency, operates on a decentralized network, enabling peer-to-peer transactions without intermediaries. Its widespread acceptance and usage make it a prominent digital currency in the crypto ecosystem. Next up, we have Ethereum. It's not just a medium of exchange but also a decentralized platform for executing smart contracts and building decentralized applications, dApps. Ethereum's native currency, Ether, ETH, is recognized as digital currency for GST purposes. Lastly, we have Litecoin, often referred to as the silver to Bitcoin's gold. It shares many similarities with Bitcoin, but with faster transaction confirmation times and a different hashing algorithm. Litecoin's adoption and community support make it another recognized digital currency under the ATO's guidelines. Now, let's turn our attention to crypto assets that don't qualify as digital currency for GST purposes. Loyalty points earned through loyalty programs for goods and services don't meet the criteria for digital currency. These points are limited to use within the loyalty program and lack universal exchangeability. Similarly, in-game tokens restricted to the confines of a specific game environment are not considered digital currency. They cannot serve as a universal medium of exchange. Another category of crypto assets that don't meet the digital currency criteria is non-fungible tokens, or NFTs. These unique tokens cannot be exchanged on a one-to-one basis like other digital currencies. The supply of an NFT is subject to taxation, unless exempted from GST. Stablecoins, which are crypto assets tied to the value of another asset like a commodity or fiat currency, also fall outside the definition of digital currency. The supply of stable coins is categorized as an input-taxed financial supply unless exempted from GST. Lastly, we have initial coin offerings, or ICOs. Whether an ICO qualifies as digital currency depends on its classification. If it's categorized as securities, derivatives, or confers rights or entitlements to goods and services, it's not considered digital currency. The supply of such an ICO is an input taxed financial supply, subject to GST unless exempted. Understanding the taxation implications for non-qualifying crypto assets is crucial for individuals and businesses involved in the crypto space. Let's take a closer look. Compliance with GST regulations is of utmost importance for a transparent and trustworthy crypto ecosystem. By adhering to the ATO's guidelines, stakeholders can ensure compliance, minimize the risk of penalties, and contribute to the growth of the digital currency landscape. And that's a wrap for today's video. We hope you found this comprehensive understanding of the ATO's guidelines enlightening. Remember, compliance is key when it comes to taxes and crypto assets. If you have any questions or want to share your thoughts, leave them in the comments below. Don't forget to like and subscribe to our channel for more exciting cryptocurrency content. For all your SMSF crypto administration and tax needs, contact my SMSF. My SMSF, call 1-300-545-516, info@mysmsfproperty.com.au.